Hey traders, today we're going to learn a new strategy. This is going to be a reversal strategy, and it's actually going to tie in really well with the pullback strategy we learned throughout the transition phase. Now, if you are here, I expect that you have been through the full transition phase, followed all directions in that phase, and that you are now already a profitable trader. Some of the things we're going to be talking about throughout this section, especially when we get to the strategies, are going to be very complicated techniques and strategies that you will need all of the skills from the previous lessons in the transition phase in order to accomplish. For instance, what we're going to show you today, what we're going to talk about, is a strategy with two separate entry reasons, and we'll get more into the strategy here in just a second. But before you even take this strategy and go out into the markets and try to start trading it, you have to do your own back testing of this strategy. You have to build an entire trading plan around it or incorporate it into your trading plan. If you're currently trading the pullback strategy from the transition phase, you'll have to incorporate this into your strategy. You have to optimize the pairs for this, incorporate them into your backtesting results for the pullback strategy, and do all the stuff we talked about in the transition phase. So again, it's extremely important that you have been through the transition phase before we begin this lesson. So if that's the case, then let's go ahead and get started. Right now we are on the euro-dollar chart, and as I said, this is going to be a reversal and kind of a consolidation strategy that's going to tie in really well with the pullback strategy, because the pullback strategy being trend continuation, whenever the pullback strategy goes through drawdown, if you have a consolidation and reversal strategy, it can really help to improve that drawdown. So adding this type of trading strategy in with a trend continuation strategy is something that I found to be really beneficial for my own trading, and that's why I want to share this strategy with you guys. So here on the euro dollar, we're going to take a look at this strategy. It's extremely simple. All we have to have is the RSI indicator and the ATR indicator on the chart. The ATR indicator should already be on your chart. It's what we've been using for stop losses throughout the entire course. Now the RSI indicator, I'll go ahead and show you guys the settings for this specific strategy. Here on this specific strategy, we need an RSI setting of 7. The length or the period of this RSI needs to be 7. Right here in style under trading view, I don't know what platform you're using. If you're not using trading view, you'll just need to change the upper line, this upper red line you see, to 80, and the bottom green line that I have on here to 20. They may not be red and green, but your top line or your overbought line needs to be 80, whereas your oversold line needs to be 20 for this specific strategy. Now guys, it's not going to take me very long to explain this strategy to you. Now that you have the settings for the RSI, hopefully you already have it plotted on your chart, and all we're going to be doing with the first entry, and the first entry is what we're going to be using here on the euro dollar, is we are looking for the 1 2 3 engulfing pattern. Now we've studied this already, so I'm not going to spend a lot of time going through this, but an example of the 1 2 3 engulfing pattern, if I do one right here, is a market that's moving up, and we continue to move up and then have a engulfing candle afterwards. So this candle would be red. Again, we've already studied this. If you haven't been through the transition phase, and if this isn't familiar to you, then you need to go back, but if you have, then this should be extremely familiar. So what we have is our 1 2, we need a swing high followed by a higher swing high. 3 is a lower swing high that also engulfs the previous candle. So using this 1 2 3 move, let's say this market is overbought. Look down here with me. So this market being overbought, if we got this candlestick formation, the close of that third candle, the close of our 1 2 3 engulfing candle is our entry. Now this strategy works really well on a couple of different pairs. I am going to share with you guys my favorite pair for this strategy with this specific entry. That way you'll have something to get started on when it comes to your back testing. And also, I'm going to show you two different entry reasons for this strategy. We're going to be using the same settings on the RSI, but we're going to be using two different entry reasons. Some pairs work better with this entry reason that we just discussed, and other pairs work better with the other entry reason that I'm going to show you as well. I'm also going to give you guys my favorite pair for that entry reason, but let's go ahead and dive into this strategy. As you can see, all we're looking for is our 1 2 3 engulfing pattern. We're going to be looking for that when the market is either in a overbought or oversold condition. If we're in an overbought condition, of course we'll be looking for this, a 1 2 3 engulfing bearish entry. And if we are in an oversold condition, you can flip that around and it'll be a 1 2 3 bullish entry. We'll be looking for a red, another red, and then a green bullish engulfing candle here, giving us that 1 2 3 bullish entry. That's what we'll be looking for if the market is oversold. here on our RSI indicator. So again, guys, this should not be very complicated considering the fact that you've already been through the entire transition phase. So what we're going to do is just go ahead and take a look at a few of these on the chart. We're going to start right back here on the euro dollar, and I'll start to scroll sideways. As you can see, our RSI indicator is right here. Just keep an eye on price action, and right there, if I zoom this chart in, you can see that we actually have an entry, and I'll let you guys spot the next couple of entries I see. But here, and actually I'll zoom in just a little bit more so you can see that this is in fact a 1, 2, 3 engulfing candle. We have a market coming out of an overbought condition. We made it above that 80 mark, our red line. So since we have a market coming out of that overbought condition, we know what we're looking for. We're looking for a 1, 2, 3 engulfing pattern right here coming out of that overbought condition. Since we get that, that's when we would be placing a trade, which is right here at the close of that candle. Now for stops and targets on this specific strategy, we're using exactly one ATR. Look at the top left with me. Right here, our ATR indicator we've been using for stops. Instead of using the way we use for pullback strategies on this specific strategy, we are placing a stop, literally one ATR. So right now, if we're hovering over this candle, you see we have a 32 pip ATR. That means that we would put a stop loss 32 pips above this swing high. So with that being the case, now you should understand how we're going to be placing trades. The entry reason we're going to be using, along with the condition of the RSI being an overbought or oversold condition, stop loss is set to 1 ATR. So with this being 32, we would have a stop loss 32 pips above this swing high. And a target, again, for me, first targets are always at a 1-to-1. Now, if you are someone who's not able to trade two targets, I would suggest going ahead and trying to test this with a larger than 1-to-1 risk reward for first targets. So if you can only trade one target, maybe test this strategy with a 1.2 to a 1.5-to-1 risk reward, or maybe even test it going down to other structure levels to see if you can get a better risk reward out of it, because that will give you an advantage whenever it comes to profitability of the strategy. The problem is, though, that this will also give you less of a winning percentage. So keep that in mind. After you test using a few different target methods, you'll see which one works best for you. So that's exactly what we'll be looking at for a bearish entry. That's an example of a bearish entry for the 1, 2, 3 reversal strategy. And sorry guys, I did not mention that. That's what this is called, is the 1, 2, 3 reversal, or at least that's what I'm going to be referring to it as throughout the rest of this course. Let's continue to look now for another entry. Let's try to find a bullish entry now. If we see a bearish one, we'll go ahead and point that out as well. All right, market is now oversold. If I can find the candles, there we go. Okay, so we have an oversold market, as you can see. Looking down, I'll make this a little bit bigger. So as you can see right here, this market goes oversold going below our 20 mark, which is our green line. Once we get oversold, we know what we're looking for, right? We're looking for a 1, 2, 3 engulfing pattern. This is a pattern we've been studying throughout the transition phase, and that's exactly what we're using in order to take advantage of reversals and consolidation using the 1, 2, 3 reversal pattern. So here we have that 1, 2, 3 engulfing pattern. What we would do is take an entry at the close of that 1, 2, 3 engulfing pattern. Our stop loss would go below this swing low by 1 ATR. Looking in the top left, guys, up here, the ATR right now is 32. I know that may be a little bit difficult to see, but just trust me, it's 32 pips. We would put a stop loss 32 pips below this swing low. For me, my first target would be at a 1-to-1 risk reward, and then I'd be managing this position on the way up, because these guys, these two strategies we're going to talk about in this video, while in overbought and oversold conditions, although they are counter trend, the reason I like taking one target, moving a stop loss to break even, is because I stay safe with my one target, and then also move that stop loss to break even. And if the market decides to reverse and shoot higher in a dramatic way, then I'm able to take advantage of that as well with multiple targets. So if you have the ability to, I would suggest using multiple targets with this strategy. Of course, test it yourself before doing so and figure out the best way for you to trade it based on the factors you've had to incorporate in your trading plan, including the time you have to trade and your own personal trading goals. So let's go ahead and continue looking here on the euro dollar. We'll try to find a couple of more trades here on this pair, and now we have an overbought market, and looky there what we already have. After that overbought, looking right here, market comes up over the 80. And another important note, guys, it has to be directly after overbought. So what I don't want to see RSI divergence using this strategy. I want to see a market that goes overbought, and the candle after overbought has to be our 1, 2, 3 engulfing, has to be our engulfing bar. If it's not, it does not count as a valid entry. But as long as that third bar comes directly out of overbought or oversold and is the engulfing, the 1, 2, 3 engulfing that we look for this strategy, then it's a valid trade. We have a 1, 2, 3 engulfing pattern here. So again, entry at the close of this candle, stop loss 32 pips above the swing high. And that's what we'd be looking for there. Let's see how that trade would have played out. As you can see, market pushing down. We go oversold again. And right here, guys, I'm just zooming in on the oversold line, but as you can see, giving you a little more detailed example of what I was talking about. Right here, this market does go oversold. We do get below 20, and that's on this candle. So as long as my engulfing is directly after an oversold candle, then it's a valid entry. Right here, we have a 1, 2, 3. And of course, this is an engulfing candle. So having this 1, 2, 3 engulfing is still valid because we were oversold during the swing low. As long as we're oversold during the swing low, that's what makes this a valid trade as well. So that's another point to keep in mind with this specific entry. Of course, we'd be waiting on that 1, 2, 3 engulfing. We'd look at this as our swing low. We'd go 32 pips below that. If you can look up here with me, you can see that our ATR is 32 pips. 32 pips below that low is where our stop loss would go. Target at a 1-to-1 risk reward, manage the position on the way up, try to get multiple targets out of that, and we'll continue looking. And now we're at current date, guys. So I don't want to spend too much time on this. It's an extremely simple strategy. Hopefully you were able to understand everything about it. If you were not, or if you have any questions about this strategy, feel free to email me personally at steven@thetradingchannel.net or email support@thetradingchannel.net, and someone will get back to you as soon as possible with an answer to any questions that you have. But again, guys, very simple strategy. We'll speed through these rules once more. We have an RSI with a period of 7 with an 80-20. Oversold and overbought line. Other than that, all we need to see is candlesticks and price action. We're looking for that 1, 2, 3 engulfing pattern that we've already studied previously in the course. While the market is in an overbought or oversold situation, the engulfing candle, or the swing high candle actually, of the 1, 2, 3 engulfing must be oversold or overbought. So the swing high or swing low of the 1, 2, 3 engulfing, again, like what we were talking about here, this swing low had to be oversold. That has to happen every time to make this trade valid. And let me actually go ahead and show you guys an example of how that would affect the trade and how that would make a trade not valid. So if I can find some RSI divergence real quick, I will show you guys an example of this not being valid. So hold on just a second. And with the power of editing, we're already here. So right here, as you can see, we have oversold right here. Now, a lot of traders I know would probably, if I did not explain this, be asking me, well, what about this right here? We have a 1, 2, 3 engulfing candle, and we were oversold back here. Does that count? And the answer is no, guys. We need this candle. So right here, this candle is right here. That's not oversold. We're not below our green line. The swing low candle has to be an oversold candle. The swing high candle has to be an overbought candle. And that's really the last thing you're going to have to pay attention to while going through the markets and testing this strategy. So with this strategy, again, I told you I'd give you my favorite pair. My absolute favorite pair for this strategy is the euro dollar. It performs exceptionally well using this strategy, but again, do not take my word for that. Go out and test it. This strategy does not take very long to test whatsoever. You can literally test it within 45 minutes more than likely. So test it, add it into the spreadsheet for the pullback strategies on the pairs that you're currently trading, and you'll probably see that it affects the drawdown in a very positive way because of this being a reversal and consolidation strategy that we're adding to a trend continuation strategy. And of course, you can go through the markets and test this strategy on other pairs as well, but by far the euro dollar is the pair that performs the best using this specific strategy. At least according to my testing. Maybe you see the market differently than I do, but if not, then the euro dollar is going to be your best bet to start your testing on. And again, guys, just make sure you go through the entire process that we did in the transition phase. The entire process, guys. Nothing is any different about this strategy than the pullback strategy when it comes to putting it in the trading plan. You need to test it on a few different pairs, pick the best pairs that you think perform the best based on what you look for in a strategy, whether that's the most when it comes to equity return, the smallest drawdown, how much it affects the pullback strategy pairs you already have, and then decide accordingly how you'd like to implement this into your own trading plan. So guys, that was the 1, 2, 3 reversal strategy. I hope you have fun with this one. And again, if you have any questions, just let me know. I'll see you guys in the next video where I'll share the second entry reason. I'm just going to go ahead and break this up into 2 videos because this one got a little bit long. So talk to you guys in the next one. See ya.